Hello, good afternoon. You're watching Your Stocks on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai studios. A quick look at the markets. Yesterday has been a bit of a respite after the fall we saw in the last couple of trading sessions. Nifty holding on to gains of 0.3%. 24,500 is what the Nifty as of now is managing to hold on to. Started a bit and went in the red, the Nifty, but recovered from the day's lowest point. Nifty Bank, that's where we're seeing some bit of a pressure today coming in. Nifty Bank is just flip-flopping between the red and the green. As of now, seeing a decline of around 0.05% and almost near the day's lowest point is what we're seeing the Nifty Bank at. But outperformance today coming in from the mid and small cap side. The broader markets clear outperformance there. 1% and more of the uptick that we're seeing for the Nifty mid cap as well as the small cap. And IT, let's not forget that. Nifty IT is among the top sectoral gainer today. We have Infosys, TCS that's holding on to strong gains, and on the back of earnings, Persistent System, Coforge that also managed to hold on to good gains. But that's how the market setup is looking like. But let's bring on board our experts for today who will be solving all your stock related queries. We have Rajat Bose from RajatKBoss.com as well as Parthiv Shah from Tracom Stock Brokers joining in with us to solve all your stock related queries. So very good afternoon, gentlemen, and thank you so much for joining in with us. Let's just start with talking about the markets. After that sharp fall that we've seen, Parthiv, what's your view on the markets now? 24,500 as of now, Nifty is holding on to that, but what should we be watching out for?
Good afternoon, Vinny and Rajat. See, our sense is that, this is a very healthy correction. And I think we were all expecting this. And more importantly, as and when we started seeing the Q2 numbers, I think the street was certainly disappointed because if you look at the approximately around 170 companies which have reported so far, the revenue growth has been mere tepid at around 5-6%. And so has been the PAT growth on a year-on basis to the tune of 6 to 7%. I think this is not what the markets were pricing in. We're quoting at around 21 times forward FY25 multiples. And with such earnings, I think the multiples look very, very expensive. So that is the reason why the markets are correcting. Plus, we saw almost 82,000 crore month till date in terms of FII selling. And that has also added to the concerns. And I think with all the geopolitical tensions going around, I think some of the long-only funds want to go a little light going into a major event like US elections. These are the reasons why the correction is taking place. But our sense is this is pretty healthy. Any further downside here in the market, and especially the mid-cap, small caps, which have corrected more heavily, I think investors should look into restructuring their portfolio and buy good quality names.
Okay, and that's what we'll be solving for our viewers as well, if any doubts that they have for some of the names that they are holding. Let's start with the queries then. Indira Lakshmi is writing to us from New Delhi. She's holding 450 shares of RVNL at a price of around 259 rupees per share, making a good amount of profit. Let's not forget all these railway stocks have seen that run up in the last 1 year. Now wants to know whether she should continue to hold this or maybe look to sell, and if she has to sell, what price should she be exiting at? Rajat, what's your view on this one? Last 1 month, RVL seems to be a bit under pressure.
Actually, it has come under pressure since mid-July when it posted a high just around, say, 650. After that, it has been correcting, and currently it has, at least in today's session, the low that we see is 421. It is very close to the 200-day exponential moving average at 409. So a stock that has corrected from its high to the 200-day exponential moving average, and it has taken about, say, nearly 3 months to do so, means that the correction is more or less through. So I would not really advocate getting out of this stock right now. In fact, one can average one's position at this juncture and put a stop below, say, 380 for the fresh positions or for the whole positions and continue to hold on.
Okay, continue to hold on. If any fall, you could look to add. That's a word coming in from Rajat. Parthiv, would you also concur to that? And, RVNL or railway stocks, is that still a hold?
Even purely on a fundamental basis, I think RVNL is a very, very expensive stock. No doubt, I think there's a lot of work going around in the railway sector, and it is evident in the fact that RVNL, which used to have an order book of around 32,000 crore 4 years, 5 years back, is now currently sitting at an order book of almost 65,000 crore. So they doubled the order book. But I think if you look at the PE re-rating, this was a company which used to quote at around 10 times, 15 times. Currently, it is quoting at a very expensive 55 times. And this is the only concern. And I think this stock, if not a major price correction, as Rajat said, could for a very long time correct, because I don't see that the execution pace would pick up to an extent to justify these valuations. If you see last 3 years, the revenue execution has picked up from 50,000 crores to around 21,000 crores. But the current multiples and the current valuations probably are looking to justify a revenue execution of 35,000 crore, which is not looking likely in the near future. So we would not suggest further add into this position, but if the investor is holding on to it, just hold on.
Okay. Let's move on. This next query we have is on JSW Steel. Prasad is writing to us from Mumbai. He's holding 20 shares of JSW Steel at a price of 900 rupees per share, making decent profits as of now because the stock is at around 963. Wants to know whether he should hold or look to sell this counter. Rajat, what's your view?
Well, I would say that one can book profits if one wants to, because it has already broken the 9-day, 20-day as well as the 50-day moving average. So it can go further down. But at the same time, one can wait a bit. If it were to, say, take out 970, 975 range, then there is a possibility that it might even test the 1,000 mark. If that happens, at that point of time, one may decide to get out. Otherwise, I would say that sell only below 955.
Okay, and Parthiv, what's your view on this one? Fundamentally, how is JSW Steel looking?
See, fundamentally, I think it's one of the finest steel makers in the country. Despite not having fully captive iron ore and coking coal resources, this is a company which boasts of having one of the lowest cost of production. And if the investor has a slightly long-term view, long-term in the sense that next 3 to 5 years, then by next year, JSW Steel will be having capacities of almost 37 million tons. And they have capital work in progress and expansion pipeline to the tune of almost 50 million tons by 2030. And I think looking at the track record of capital allocation of this company, I think they have a fantastic track record. So our sense is that, if the investor has a 3 to 5 year horizon, we believe the steel demand will continue to grow. Government might take some measures to allow the domestic companies to benefit because there's a lot of dumping taking place from the Chinese players. So we believe it's a fine steel stock and investors should hold such companies for long term.
Okay. Let's move on to the next query. Rehan Shah is writing to us from Gujarat. They're holding 50 shares of Nika at a price of 180 rupees per share. Wants to know whether to hold or switch to another counter. Nika, when you look at it, has not done much, even after the listing. We've seen that sharp fall that's come in, and it's not managed to recover to those levels. Parthiv, what is fundamentally, how is Nika looking like? Because we've seen that subduedness in Nika, even during earnings, it's not outperforming in a sort of way. So what should we be watching out for fundamentally there?
Absolutely. If you recollect during the IPO, I think there was so much of buzz and people craving to get allocation in this company. And at one point in time, the market cap had gone to a stupendous high levels of around 80,000 crore. After which I think the stock has massively underperformed. And this is what happens when there are these overpriced stories and where market tends to expect that these companies will continuously grow at a very, very high levels. And the growth did not come to the expected levels because there's a lot of competition taking place from other retail giants like that of Reliance, Aditya Birla Group. So I think our sense is that the last quarter internals were good. The gross merchandise value had increased and it was a 25% growth year on year. And in the fashion category, I think the company has been doing reasonably well. The beauty gross merchandise value grew by almost 29%, which was quite encouraging. But again, my concern is the valuations. These numbers also don't justify, the current multiple at which Nika is quoting at. And going ahead, we are expecting massive competitive intensity to grow, which would impact Nika's business. So not very gung-ho. And I would suggest if the investor is making at all any money, just exit this company.
Okay. So exit the counter if you're making money. The viewers just breaking even at today's level, at least when you're looking at it. Rajat, what's your word on Nika? You know, should the viewer continue to hold at these 180 levels or maybe look to just book out?
If the investing horizon is short term, then you exit because it can go down to 160. And if the investing horizon is pretty long, then I would say that since 2023, the stock is actually forming a base, and that base building is still not yet over. So you have to have patience for Nika to give you good returns from here. I completely agree with Parthiv that as of now, from the current valuation perspective, it's a sell. But technically, it's not all that weak. In fact, I don't expect it to go below 160. But yet, if it is a short-term bet, then it is better that you exit.
Short term, then exit. Long term, you can continue to hold Nika. That's the word coming in from our experts. But on that note, we're going to slip into a short break. But here, we are leaving you with some good news. 1 million Indians are now making smarter investments with the help of Money Control Pro. Money Control Pro, which is a part of the listed entity Network 18, has crossed the milestone of 1 million paying subscribers. The site closed September at over 53 million unique visitors, nearly 30% higher than its closest competitor ET, underlining the fact that Money Control Pro is India's platform of choice when it comes to making financial decisions. If you haven't subscribed yet, scan the barcode on your screen to become a part of Money Control Pro family and help yourself make better financial decisions. Money Control also celebrated 1 million subscriber landmark this morning by ringing the opening bell at the National Stock Exchange. The editorial team of Money Control Pro was also joined by India's leading investors, markets, minds and movers and shakers, including Ashish Chauhan, the MD and CEO at National Stock Exchange, Sameer Arora from Helios Capital, Edelweiss's Rajat Shah for a special chat on the power of Indian equities. Welcome back and thanks for staying tuned into your stocks on CNBC-TV18. We still have our experts with us for today, Rajat Bose as well as Parthiv Shah, to solve all your stock-related queries. Let's move on to the next query then. We have Sriram, who's writing to us from Thane. He's holding 60 shares of Hindustan Zinc at a price of 450 rupees per share. Wants to know whether he should hold or sell the stock. Currently, obviously, making good amount of profits on this one. Parthiv, what's the view on Hindustan Zinc? They reported the numbers a few days ago as well. Decent set that came in from the company. What are we watching out for here on the fundamentals?
See, firstly, if you see, the stock recently has corrected massively from its highs of 750 levels. And currently, it's forming a base somewhere around 500, 550 zones. I think we are very upbeat at these valuations because I think we know for the fact that Hindustan Zinc is the second largest zinc producer, not only in India, but globally. It has very low cost of operations and, very, very efficient operations. And the best thing is that they are fourth largest in terms of silver production. And I think currently, if you look at the silver realization, they almost touch a lakh rupees per kg, which is, I think, extremely beneficial for the earnings going ahead, despite the fact that the zinc prices have stayed a little tepid. Going ahead, we are expecting a recovery in the zinc price as well. And that is where I think Hindustan Zinc should do lot better earnings. And our sense is that these valuations currently at which Hindustan Zinc is sitting as is pretty attractive. So if somebody has a long-term horizon to the tune of 1 to 2 years, I think certainly one can go long.
Okay, so one can go long, and if someone is holding, then they can look to hold this as well. Rajat, what's your view on Hindustan Zinc? Should the viewer continue to hold this at these levels?
Yeah, sure. I would say that it is actually one can add more. His position, he has got only 60 shares, can buy more here. Because after posting that 778.85 high in the month of May, that was 22nd May, if I read it correctly, from there already 5 months have elapsed and it has come down. It has been taking support on the 200-day exponential moving average, and now it is forming a base. Now, there is a possibility that there could be an upswing from here. One should continue to hold one's position. One can buy over the next couple of years. I would say that 778 or even higher levels can be seen in this, because this stocks for technical formation, Parthiv already voted for the fundamentals. Both are good. It is a buy at current levels and add more here for any existing share.
Okay. You can look to add more is the word coming in from our experts. But let's move on. HCL Tech, Rohan Bharadwaj is writing to us from Noida. HCL Tech, he's holding 100 shares at a price of 1,700 rupees per share. Wants to know whether he should continue to hold or look to sell at the current price. So yes, they are making a decent amount here. 1,700, currently the stock trading at 1,845. Rajat, what's your view on the technicals here?
Technically, it is in an uptrend and it is continuing to move up. So I would say that you put a stop loss below 1,600 and continue to hold on, because this stock is not going up in a parabolic fashion. It moves up, then it corrects, then it moves up again. So this is a very healthy move on the part of HCL Tech. So one should continue to hold on if one is already there, and on dips one can also buy.
Okay, and Parthiv, what's your view on this one?
Yeah, we are upbeat overall on the IT sector, and HCL Technologies, especially after the results and the details that came out in the call. I think definitely long term it looks very attractive. If you look at the growth in terms of constant currency, the company has grown at 6.2% year on year. No doubt, I think this is not the strongest growth that we have seen in the overall IT sector. But I think what we liked is that the company is very upbeat and they've upped their guidance for next year. And more importantly, in the generative AI space, I think there are lots of collaborations with that of Google, Microsoft, which will drive future growth. In terms of TCV, they are at $2.2 billion, which is, I think, pretty healthy. And this is a company which generates a free cash flow of almost 2.4 billion every year. And that is something which is very healthy. So they have done acquisitions which will enhance their capability in the generative AI space. So definitely valuations are not looking very stretched as compared to some of its peers in the mid-cap IT space. So we prefer to go long on HCL Technologies.
Right. The next query is from Achyuta BS, who's writing to us from Karnataka. He's holding 50 shares of IRCTC at a price of 739 rupees per share. Rajat, what should the viewer do? Continue to hold or maybe book out the profits and sell the stock?
No, I would suggest continue to hold on, because see, initially, early on in I think late 2021, there was a high in 4 figures. And then again, it fell to something like 600. Recent high again was 1100. And after that, it has come down. And it has come down to a very critical support area between 850 and 800. Unless that level is taken out decisively, I would suggest one can continue to hold on. Because overall, this stock seems to be doing pretty well from a technical point of view. There is no reason as to why you should get out at these levels. If above 1,000 or close to 1,100, you want to exit, fine, but not at current prices.
Okay, that's all the time we have actually to take all the stock related queries. But thank you so much, Rajat, as well as Parthiv, for joining in with us on the show today and solving your viewers' queries. But, as we were solving all those queries, look at the Nifty. That's seen a bit of a fall coming in, actually a sharper fall in the last half an hour. And right now, the Nifty is below the 24,500 mark, down almost 0.1% in trade. So keep an eye out on that. And closing bell will take the action forward. Thanks so much for tuning in.